Hello, everyone. This is Tony Lawson, CEO and co-founder of SHOPPE BLACK. Today, I'm joined by Mr. Ken Goodwin, Senior Managing Principal and the President of Jeanesis. He's an influencer in the blockchain industry and has over 20 years experience in capital markets and is an OG in the investment game. So definitely glad to have him here and have him drop some gems for us. So Ken, how are you doing today, sir?
Man, I'm doing great. I like to be called the OG, the original gangster, right?
Yes, sir. Yes, sir. You got all that wisdom. I need you to help us, spread it around.
Oh, most certainly. God bless and God willing. Always. Most
Yes,
certainly,
sir.
sir.
So let's start at the beginning. Oh, first, let me ask anyone who's watching, please hit the like button and subscribe so we can help get this video and others out to more people. And with that said, Ken, how did you become an investor? How did you get into the investment game?
That's a great question, Tony. It was a longer process than I actually anticipated. I started off, coming out of, I grew up in Hoboken, New Jersey. I was a little paper boy, and I used to read the stock market all the time. And I used to say to myself, what are these numbers? These numbers are going up and down when you see a company and people seem to be happy. Every time I gave that paper, somebody jumped up and they said, oh, the numbers did very well and everything else. I've learned at a very early age about stocks and about the importance of owning equity and income. But I didn't start doing that till later on in my life, right in the college days when I started, buying my own portfolio of stocks and everything else. But the fast forward, the way I got involved in venture capitalism, which is more different, was mainly because I was advising several companies on the capital market space. I was helping them to segment overseas, get more corporate partnerships and more corporate clients. And a lot of these clients were more mature. When we say mature, meaning they have revenues of anywhere, Tony, between about 3 to 5 million. And they needed assistance in terms of trying to get connections overseas and build offices. So at that time, I was working with government service entities like the Japan Exchange Trade Organizations, the Hong Kong Trade Development Councils. These are organizations that help firms, they provide assistance to firms to build their offices overseas. And so in doing that, there's a great portion of due diligence that you have to do. You literally have to sit down and meet with the companies, meet with the founders, get to know their board very well. Because anytime you start to build operations overseas, it's a huge financial risk to that company. So that company, they may have the wrong product development, they may have the wrong staff, they may not even have enough capital to survive overseas and deal with all the macroeconomic changes that may occur. So all of that due diligence was being done before finally making that decision. Over time, I started to realize, I said, wow, okay, here's a great opportunity here. I'm learning a lot about these companies. I'm bringing them overseas. Investors were coming up to me. So here's the trick here. A lot of the investors overseas were saying, you got a great portfolio of companies. Can we, get a chance to meet the founders and meet with the board members and everything else and give us an oversight of the companies? And since we're not a broker dealer, you have to be very cautious as to how you get paid. So, you have to be very cognizant that if you're not a broker dealer or if you don't have a broker dealer working for you, then you can't really receive the commissions directly. So we had to get a broker dealer to help us out so we can get commission. I said, I'm not going to just give you this information for free because, information is valuable here. Yep. You're asking me for a service. And I said, that light bulb went on and I said, oh, let me charge for this. So, I started to get paid for it, but I saw the lucrative side of that. I said, wow, they're investing in these companies. They're buying in these companies at early stages, and I'm doing the due diligence for it. And so I got my first opportunity was with a syndicate that was done in California called Rubicon Ventures. Andrew Roman is a great guy. He gave me a great opportunity to be a part of that in terms of finding companies, doing due diligence. In that syndicate, you had people like Danny Myers, who was the founder of Shake Shack, Andreessen Horowitz. So you had some really powerful names. And I got a chance to see their portfolio. And I'm sitting here saying, these guys, they're really working together. They're syndicating together. They're doing due diligence on these firms. They're looking at their cap tables and everything else, and they're making final decisions. They're making it very easy for themselves. They're mitigating their investment risk, but they're also at the same time, they're helping these companies to grow. And I got to the point where I said, I can do this by myself. I have a portfolio already of about 20 to 25 firms. These firms are global. They fit the criteria in terms of the space that I'm comfortable with, which is that early stage A space where you do have companies. And early stage A is tricky, Tony, because it's one of those stages where people say it starts at $1 million and you can go to 50 million. I like to say it's between 3 to 5, because at that stage, and I may be flexible to go down about 2 million, but at that point, the conversations are different with the owners. They're not just saying that they just want to just raise capital. They actually want to deploy that capital to build their growth, and they want to build their staff and build their products. So what happened over time, I started to say, let me just do this, let me do this by myself. And other people were saying, I think you're good at raising capital. You've been raising for us, you might as well raise for yourself.
Right.
And that's how I started. I started just basically just following everybody else, it's basically just saying, hey, it's time for me to raise for myself. I have a portfolio. I know that the areas of where I want to raise in FinTech technology, reg technology, artificial intelligence, blockchain enterprise, that's a different conversation. As well as big data and smart cities. So those are the areas that I've worked directly with experts on, because I think part of being a venture capitalist is being also able to be a subject matter expert.
Right.
A lot of VCs don't take the time to study and understand about the industry and their client base. I actually do that. And in fact, I've been doing that publicly. You'll see me in the TEDx talks. And I've done that intentionally. I've done TEDx talks just to show my client base that not only am I willing to understand your company, but I'm also willing to be a student of it too.
Right.
And that's critical, because it helps with the conversation between the owners as well as between yourself too. And you can help the firm out in terms of increasing their cash flow. So that's how I got started in terms of just being a VC and investing.
Sure. Thank you. And you just mentioned blockchain and FinTech. Would you say that those are your favorite areas to kind of like do research or deal or do business in or invest in?
Blockchain, yes, because it's constantly changing. The technologies is frequently changing. Not just the cryptocurrencies. A lot of people like to say, they get caught up with Bitcoin and Ethereum and the cryptos, and that's great. I think that's a very nice way to add to your portfolio if you want to be an active investor, because those cryptocurrencies, they're very volatile. They change frequently, so you have to be very cautious as to whether or not you want to add that to your portfolio. We tend to focus not just on the cryptocurrencies, but also on the blockchain enterprise companies. And that's the companies that actually create the applications, that create the infrastructure for the actual cryptocurrencies to occur. So we'll focus on a consensus, which is the parent of Ethereum. We'll concentrate on XRP, Hedera Hashgraph. These are companies that are actually integrators in the blockchain space, and they created the actual framework for it. And that's more important because those companies, they have a revenue generating model, Tony. So these companies are not just looking at their crypto or the digital currency as their total valuation. They're looking to increase revenues by partnering and bringing in, doing business development with large cap companies. And we like to see that kind of story. That's, to me, that's diversifying the cash flow. Sure. So you're not just relying on the digital assets, at least the valuation of that. You're relying on core revenues to occur. So that's what we focus on mainly on the blockchain side. Mm-hmm. On the fintech side is very broad. Fintechnology could include firms that are what they call now your future banks or your challenger banks. These are firms that we're very familiar with. PayPal, that's I would call it a challenger bank. Venmo, Robinhood. these are firms that are actually going to get their banking charter licenses, because now they're looking to do custodial work, which is very important. A lot of people ask, well, why do you need your banking charter license? Well, one of the things that custodial work allows you to do is safeguard against assets. So now you're able to take other different type of assets and you're able to safeguard against that, but you're also able to create new products. And that's what these firms are doing. They digitize their platform or automate their platform, and now they're allowed to explore other areas where they can, create new products and product offerings. So firms like that are very key. Artificial intelligence is very important.
Right.
Firms that use both deep learning and machine learning is very critical, as well as big data firms. So when we look at FinTech technology, it's very broad-based. It includes the challenger banks, red technology, medical firms, firms that are starting to look at telehealth and health tech
Sure.
in this day and age, which is now is really data driven, but also the operations are being automated too. So firms that are really caught on to, if I had to say, Tony, digital transformation,
Sure.
which when you look at it, it's twofold. The use of big data, which big data is data that you and I own. It's our data, which data is gold, and the ability to automate the cash flow statement. And the cash flow statement includes automating the investment, the operations, and the finance processes. If you do that in a very nice, sound way, now you're onto something. And those are the firms that we want. Those are your future. I don't like to use the word unicorn. I'd rather use the word cockroaches. But those are your future unicorns. Those are the firms that are being listed on CB Insights 250.
Got it. Got it. And you mentioned diversity in an earlier question. During your tenure as an investor in this space, whether it's in an advisory capacity or VC capacity, what has your experience been when it comes to Black investors, whether it's PE firms, VC firms, working together and creating, like, as you mentioned, a syndicate?
Yeah, that was the first lesson. That's a great question, Tony. That's a lot of questions. The answer, my experience is that they're far and few. There's a lot of people that want to get more involved in this space. You got to do your work. You got to do your homework. And to give you an example, my day-to-day activities, I spend a lot of time speaking to founders, looking at pitch decks, looking at term sheets. Prior to this interview, you and I, we were talking about, last night I was on a long event that started in Australia, that started at 8 p.m. It was an investment conference, and it ended at 2 a.m. in the morning. And in that investment conference, you had 12 companies that were doing pitches, and these companies were digitally transformed types of firms, and that piqued my interest. So the day-to-day activities could be at an investment conference, it could be on calls with other venture capitalists, it could be in talking to founders, trying to help them out in terms of getting new partners or new client bases so that revenue can grow, the valuation can grow if they have new clients. You have to really take the time to do the homework. Now, in terms of getting our people, getting African Americans or people of color to syndicate, it's been a journey. I like it. I think it's an opportunity for us to grow. It's something that I learned that's been very successful for other syndicates. I think in our case, we have to pull our experiences, but also our pipeline together. There's certain syndicates in California that's really, really good for technology. So it'd be great that if they can share their pipeline with people here in New York and the East Coast. Because our skill sets here in the East Coast is that we are capital markets experts. We tend to be the investment bankers, we tend to be the traders. So when it comes down to looking at a cash flow statement, that's simple for us. We don't have a problem looking at revenues and cash flow streams because we've been doing that all our lives. Not to say that they don't do that in California, but it's ingrained in us out here. And there's a lot of old money. So what you have is a lot of family offices. And they tend to do their relationships from a very nurture standpoint. So they're nurturing relationships, which is the key in building social capital. That's the really the golden goose is
Yeah,
building that social capital. So if I had to say one of the big opportunities for us is in a syndicate is building a social capital so we can come together and we can pool our money together and invest in these companies and have that dialogue and conversations and help these founders from, maybe from a startup to grow to stage A to stage B. If they want to do an early exit, that's straight. That's great.
yeah,
I'd rather hear for companies that say that they want to do an IPO and go long term, because those companies, they have more to offer to society.
sure.
They're able to hire more people. They're able to impact their communities. They're able to become billionaires instead of millionaires.
Mhm.
I want my founders to be billionaires.
Right,
I tell my founders from the beginning, forget about being a millionaire. You got to become a billionaire and have a billionaire mentality,
right,
which is a different mentality than someone who just wants to do an early exit and become a millionaire. I said the billionaires, they understand that, the more money they get, the more they are able to deploy that capital to help the society, the more money they're going to get back in return.
right.
So it's the art of reciprocity. And that is so critical with the syndicate. That's the social capital that one of the things that is a great opportunity for us to work on. And I've learned that, Tony, when I went to Davos about 3 years ago. I
Mhm.
went to Davos. I was given an assignment and that was my first individual raising case. My assignment was to raise 20 million out of the blue. The guy, client, he said, we're going to fly out to Davos, meet all these people. You're going to have all these meetings, but we need you to raise 20 million. At least give us a word or a word commitment, a vocal commitment that they're going to do 20 million. And it happened. I can't say who, but it happened. But the great thing about it was the steps. And
Mm.
it taught me about not just literally just being there, but they did their research on me. And they kept asking, me the question, what's my impact in terms of the company, the guidance that was given to the company, not just in the capital avenue, but also in the subject matter space.
Sure.
They wanted to know how I felt about central bank digital currencies. They wanted to know what would be the future about it in terms of whether or not there's going to be a stable coin. All these questions that they were asking me in reference to the client. And so I had to be very prepared for that. And then we had multiple meetings
Yeah.
throughout the evening. I mean, from dinner to, smoking cigars, having liqueur, to having tea.
Mm.
It went on and on.
Yeah.
To going to conferences in Davos, to finally hearing them saying that, hey, we're willing to commit a certain dollar amount to their mission.
Mm.
But it was a lot of hard work. And that, to me, that was social capital at
Sure.
work.
Social capital, so important. Um, could you speak on, because I know you've done work on the continent, and me, being someone from Nigeria, I'm very passionate about Black people in the diaspora, people on the continent working together to create wealth for the global Black community. What have you seen that's going on the continent, and what are some, I guess, whether it's deals or some networking you've done there that you are uh, happy about, would you say? And what are your expectations in going forward?
Yeah, I love Africa, man. Love Africa. I mean, I think Africa is going to save the planet.
Hmm.
And don't edit that. I really do believe that. I believe, and here's how I got to that conclusion.
Hmm.
Jack Ma. Jack Ma, when he took that trip to Africa, he
Yeah,
didn't just take the trip to Africa just to sit there and say, I'm going to Africa and do goodwill.
right.
He knew that Africa was the foundation for a lot of the technical advancement that was being done.
Yeah,
The continent has one of the most youthful populations in the world. I love what they're doing on the STEM side. I think one of the challenges that Africa has is that because of the history being so beaten down by the Europeans and the Americans and everyone else around the globe, at least in terms of the finances, a lot of corruption that's going on. So what you're finding is that a lot of the things are done on a project finance basis. And here's the problem with that, is that most people would say, I got a project, got a project, got a project. And the challenge with doing the project finance is that it's heavily debt driven. So now you could be double leveraging yourself. And the person that really brought me to that was the gentleman that you had on your show, Kofi Anko. He and I had a nice conversation, beautiful conversation. We talk about banks here in the U.S. because I got to be respectful of him, but he reached out to me and we were exploring African-American banks to be a part of his deal. And what spurred him onto that was I've done a transaction many years ago called the Redemptor Project, which is based in Africa. I looked at 5 countries in Africa. It was run by a fund, Redemptor Fund, which is based in London. But they were using African country managers. So that kind of got me a little bit excited because it wasn't our people. And I use the word excited and be very diplomatic here. I was a little bit disappointed that it wasn't our people who were really managing the money.
Sure.
And that to me, spurred some of the conversation with Kofi. But one of the things that he brought up was that a basic loan in Africa starts off at 600 basis points. So you're looking at 600 to 800 basis points as a fundamental. That's a problem.
Yeah.
That is a big problem because anything above that would put you in double figures. So now you're looking at 10 to 12% off the loan, which is why most African nations cannot pay off their interest arrears because they have so many loans. They're double leveraged. And so, and that's the challenge that they're having with China. No disrespect to China. China offering this money, but it all is based on loans. One of the things that spurred me to Africa was that Africa has a lot of natural resources. And the way you build wealth is you build wealth through land. Land creates wealth because in that land is natural resources. So to me, when I think of Africa, if Africans were to look at their natural resources, they realize they have assets where they can create equity off the assets. They don't have to rely on the liability side. So it goes back into the fundamental formula. Assets equals liabilities, right? Minus shareholders' equity. So you go back into the formula, you don't have to use the liability side when you have assets and you can build your equity. And that intrigued me about Africa more so. I kept saying to myself, there's still assets there, there's still land, there's still minerals, and you have a youth population that is really key towards digitization and data analysis, big data, as well as blockchain technology and so forth. I said, if you combine the two together, Africa's going to be in the forefront. And Jack Ma was exactly thinking the same way. He saw that. And you can see that in some of the projects that I see. I think there's a project in Nigeria, Kristen Nitton. Okay. Her and her husband, Einstein Nitton, is doing a project in Nigeria where they're creating an ecosystem of incubators and accelerators in the blockchain FinTech technology space. Now, they're startups, which I think is great. You have to start up somewhere. You have that's going on. You have the project that's going on in South Africa, which is more RegTech driven. Hubert Dango is doing that with African investors. Hubert.
What is RegTech? You said the
Red technology? Red technology, and that's a great question, Tony. Regulatory technology, what it does, it takes, let's say, issues that you have with regulations, like anti-money laundering, KYC, which is know your customer, GDPR, which is used for data, where you own your own data. These challenges are occurring because of the fact of automation and digital transformation. So you're going to have new regulations all across different industries. The medical industry, you may have regulations in terms of how your data is being used. But it's very important to deal with that. I'll give you another example in banking. Because my background is from the Federal Reserve Bank of New York. But in banking, some of the big RegTech issues tends to be geared towards capital, what they call the comprehensive capital adequacy review. Banks have to be able to have capital, and they have to make sure that they're adequate enough. So these are regulations that are important. Now, what happens with technology, in the old days, you just use books and you look at the regulations and you write policies and you follow those policies. But because you automate it, you can have an application that actually tests the controls. So you're testing the governance and you're testing the risk of the regulations against the controls. And that's very important for firms because that mitigates any risk in terms of their operations. So that's why RegTech is very important, because as we automate more, firms are going to have to look at like cybersecurity. Cybersecurity is reg technology. Well, they're going to have to look at cybersecurity regulations to make sure that they meet those requirements. Anti-bribery, anti-corruption is another reg technology. So the firms that are doing that tend to do very, very well, Tony. And we actually have firms like that in our portfolio. So
How many companies do you have or firms do you have in your portfolio currently?
Currently, we have 25. We're looking to build that to about 40. Recently, I've been dipping down more to the startups area because 10% of the fund is going towards African-American male and women founders, Hispanic founders. So I've been spending more time working with a lot of the founders, and it's been great. I mean, there's some amazing companies. Just recently, just got exposed to a company down in Atlanta that's actually a blockchain-based company. They're looking at medical supplies and healthcare and telehealth. That to me was very significant because I think now those are needs. They're providing a solution to our society. I've been working with another firm that's actually doing real estate, given that the real estate market has improved tremendously. So it's just, to me, I'm learning a lot from these founders, even though they're startups. Just the innovativeness that they have right now and the energy that they have is giving me a lot of energy as an investor.
Oh, that's great. The real estate firm, are they involved in prop tech by any chance, or what sector of real estate are they involved in?
HouseLink, that's the name of the company. So HouseLink, they basically take, let's say houses that have been on the market, they're foreclosed houses, and they're looking to allow for buyers to buy into those foreclosed homes. So that's their platform. They're both operational from the standpoint that they're working with a lot of the major financial institutions. They just completed the incubator for JP Morgan Chase. They are about to join the R3 consortium. And R3 is very important on the blockchain side. They just got accepted into that incubator. So now they can improve on their beta on the blockchain side. We've been working with, and I sit on the board. I'm going to disclaim that. I sit on their board. So we've been working with Fifth Third Bank, which has been very instrumental in using their application. So they are application-based platform in the real estate side.
Gotcha.
And they've done pretty well. The founder presented at my event last year at the first globally local FinTech AI blockchain event. So that was his way of getting very comfortable around investors and proving on his presentation skills. So I'm really, really, really proud of what he's done and how he's improved his team. And it's going to be fun raising the rounds of capital for them.
No, that's great. So currently, what is the size of the fund and what is your, your plans going forward?
Yeah, great. Currently, we're still raising at 100 million. It's tricky because we can hit 200 million. We just recently got another verbal commitment from an LP, which is great to hear. It's nice to get these verbals. That's why I'm smiling more these days. But we'll see what happens. That's more money to deploy, and there's more opportunities to invest in. So our scope could go from 25 to about 40 with ease. It'd be nice. I feel more comfortable at 50. We're not one of those firms that want to have 100 firms, Tony, because we're finding nowadays a lot of people take 100 firms and they hope to hit a unicorn. We don't see it that way. Our vision is that everybody in that firm on our platform has an opportunity to hit unicorn status.
Yeah.
We are committed to growing them, not just from unicorn, but even beyond that. So we want our founders to think of long-term growth.
Sure. No, I like that approach. What would you say is the, I guess for a founder nowadays, is the easiest path, or I won't say easiest path, but what is the path to becoming a billionaire for all the founders out there who have a startup or they've been in business for, I don't know, maybe 5 years and it hasn't happened yet, but they have a good product and they're trying to figure out, okay, how can I get to this level in the game? Like, what is based on your experience, what is the path that most people take?
You know, I think the biggest lesson I learned, and here's the lesson I learned, Tony. I'm sure you have the same lessons too. Partnership. Who you partner with is very vital.
Mm,
Make sure, do your due diligence. And a lot of what I find with a lot of founders, when they throw anybody on their board, don't do that. Take
mm,
your time in making sure that you have the right mix of non-executive board members. So
mm,
critical. And I say mix. It doesn't need to be someone in that industry, but someone who offers some valuable
mm.
information or valuable relationship,
Okay,
or nurturing a very valuable relationship.
sure.
That's very critical. And you have to take time to do that. You just cannot throw anybody on your board,
Mm,
because that could be that can really that can delay your process and your growth. And I would say that's the first step. Ensuring yourself that you have the right, you're surrounding yourself with the right individuals, the right subject matter experts and board members. The second step, what I would hope that most startups would do, is get involved with a incubator or accelerator, a corporate incubator or accelerator. There are a lot of corporate incubators and accelerators like Salesforce, like SAP.io. Some of them, they don't take capital. They're not going to eat into your equity. Now, here's the reason why that's important, Tony, because now you are partnering yourself with a brand name company. That's something that's invaluable.
mm,
Also, at the same time, those companies are using your services and they're helping you to grow your platform. They're helping you to grow your business development. They're helping you to grow your product development. You get mentorships in and those programs.
mm.
That's very important to have. And that's also viable and valuable in terms of how you raise your capital, because a lot of investors, they are attracted to that. They
Mm.
are attracted to the fact that you are in an incubator and accelerator with a corporation. Oh, that's easy. That's easy to invest in, because we know that you've done your due diligence. We know that you've been due diligence, you've been mentored, you have a product developed. I mean, these are the secret sources that we have to use more.
Yeah.
They're out there, and now the pressure. We talk about the whole notion about ESG. You and I talked about that, the social side of that.
Mhm.
That's the opportunity right there, Tony. The opportunity is to say, hey, you know what? If you cannot invest us directly, then create these incubators and accelerators where you can participate and you can manage and we can be members of, so you can help build our companies and we can have partnerships there. Now we can have access to your client base. So it's a win-win situation for the founders as well as for the companies.
Yeah. No, that's great. You mentioned partnerships being key, so I just wanted to quickly circle back to syndicates. So they're all obviously they're tried and true strategies that other syndicates have been using. What are some that you would like to see more Black investors start implementing as more Black syndicates start developing?
Yeah, that's a great question. Definitely global. We have a tendency of focusing too local,
Mm,
meaning that we'll focus on a region or area, and we will not look at our colleagues across the seas, like in Africa and the Caribbean. I mean, there's a lot of great opportunities in the Caribbean marketplace,
mm,
in Germany, in Switzerland, in Asia. And I'm biased towards Asia because I spent a lot of time in Japan and done a lot of work in Hong Kong. But we have to really, money is not just in one region, it's global. And you have to be able to improve and nurture your relationships with family offices in those locations. It helps not just you in terms of raising your capital, but it also helps the firms in your portfolio. So as those firms grow, they may want to diversify their cash flow. And oftentimes they can sell their product overseas. So if you got a product here in the US that's doing very well, you may have a chance to sell that product in Japan or in Hong Kong or in Switzerland. And you need those relationships for that to occur. So I would say first global, two, be very strategic and making sure that it includes Africa and the Caribbean. You know, oftentimes what I see is they're excluded. Now I get involved in a lot of these syndicates, and what is painstaking to me, Tony, is that they're not including Africa or the Caribbean as much. And I'm like, okay, you know, I could take it twofold. I could say, well, you know, I can be upset and be angry and do nothing, or I could say, you know what, okay, that's an opportunity right there for us.
Yeah.
And I've learned over time, like even in the blockchain space, you know, blockchain, the government of Bahamas have a central bank digital currency that's called Sandcoin. And we were instrumental behind that. Rhonda Etheridge, myself, a couple others went down to the Bahamas. We were invited by the president to be a part of their first Bahamas blockchain conference. And that materials, that information was instrumental in them creating their first central bank digital currency.
Oh, wow.
So, and it's done by Black people. So, and this is why I mean the power and then the Bahamas, you know, they work with the Bermuda. Bermuda is also trying to come out with their own central bank digital currency. So we have to use all our human capital resources and get rid of the ego. I mean, be humble, be grateful. I mean, be grateful. I mean, I tell my founders all the time, I am grateful for you for allowing me to be a part of that journey. If you want to build wealth, you have to be grateful. Be grateful, be humble, be open, be willing to share the right information and nurture relationships. So I think those are the things I would like for us to do, at least in terms of a syndicate. Areas of opportunities for us, I think one has to be in terms of the STEM space. Now, we really need to really help a lot of our firms to automate their processes. And here's I'll give you an example of this, Tony, a real example. Like the barbershop, I can't think of the name of the company. They automated their barbershop.
Squire?
Yes, I love that company. Love them. And the reason why they're very appealing because he automated the processing of barbershop, of being a barbershop. Now he's not only automated in terms of having barbers from around the world where you can go online. He's got an e-commerce platform. What's more important is the data that he's ascertaining. That data is valuable. Data is gold. So now he's able to take that data, he can make other products and other services because he understands the trends of his client base. So he's diversifying his cash flow. So his valuation could be at 2 million, but when you add on the services, the data services, he's going to 10 million. And from a typical 4-to-1 standpoint, he's now at 40 million to about 50 million. You see, and that's what I'm talking about, what we have to do. That's the secret sauce there. We have to be able to expand ourselves in STEM, digitally transform our operations, and grow. And that allows us to do that overseas, not just here regionally. So those are the areas that I hope that we can focus on as a syndicate.
No, that's amazing. And lastly, in wrapping up, I know previously you mentioned, I guess in a separate conversation we had, that you're doing some STEM work with HBCUs. Could you talk a little bit about that also?
Yes, and that's very recent. And I'm gonna share the scoop. well, I have to be cautious. I have to be cautious about. But it's an older school, historically Black college, university. They actually won a National Science Foundation Award in blockchain and STEM. And now they want to they start off by building a research and development center, but they're also looking to build a incubator and accelerator where they can have the students to create new products and new businesses in the blockchain, in the STEM space. Now, I've had a vision and a mission to do this globally. And I've been talking to folks at the University of Toronto. I love to do it at my alma mater, Johnson C. Smith University, Howard University, but all the schools, essentially, and tied it into the work that's being done in Africa. There's a
Hmm.
lot of schools in Africa and a lot of incubators out there, and try to interconnect that together, as well as some of the work that's being done in the Bahamas and Bermuda, and also in Haiti. So that's, that's a nice project to have, because we need to build up the pipeline, and I look at this as a pipeline source for a lot of the investors. So
Yeah.
now the investors, they can actually invest in these companies,
Yep.
and they can mentor into these companies.
Yep.
And this is how we built this kind of generational wealth. I mean, this is the things that we were not doing as a people, but we have an opportunity. And I think, as I said before, we're gonna solve the world. We're gonna help the world out, and we're gonna be the answers to a lot of the problems in this world. So I'm very excited about it, and it's coming along very, very well.
No, that's amazing. Well, Ken, thank you so much for your time. You know, obviously you and I can talk for 3, 4 hours at a go, but we're going to try and cap it right here for this
Oh,
particular conversation. And, you know, definitely come back and, you know, share some more developments on what you're doing with the different projects.
well, thank you for having me, Tony. I appreciate it. It was an honor and a privilege. And as you said, we can talk all day, but we got to go to sleep.
All right. Thanks so much, Ken, and talk to you soon.
Thank you, sir. Thank you.
Take care.